that bottom edge. Take a look at what happened in terms of the delta. You see that everybody thought it was a bottom edge on the euro. You can see that everybody was buying euros all the way through that process. You see that? Everybody's buying euros. So what did they do? They jammed the buyers. They didn't just jam the buyers, because obviously they were still spoofing buying liquidity here, still spoofing it. But they were jamming it in price action. Look, the price action just couldn't push the price. They could not get the price up. All that buying delta, and they couldn't take out the highs. So what did they do? They ran the price down and through these areas, and look at what happened to all that buying that came in through this leg. Look at what happened to all those buyers. As soon as it came into this, as soon as they realized they weren't getting filled, as soon as they realized they were on the wrong side of the trade, you see what happened? They threw away all their positions, and they got all the buying opportunities in the world started to show up just there. So the people that really wanted to buy it were able to buy it at a discount price, with all of these buyers here getting pushed out of the trade here. And that's exactly the same delta. Look, the net delta in equaled the net delta out. It's amazing, Miguel, isn't it? The net delta in equaled the net delta out, and they all threw away their positions. And that was at 10 past 11. From 10 past 11 onwards, you can see what they did to the euro. From 10 past 11 onwards, and this is this bottom edge right there, the euro went straight up after that jammed price action right there. It's crazy good, isn't it? But it's crazy good if you recognize it. As I said, I actually started to do an article at the weekend regarding this, basically the jammed liquidity and looking for it for the flip opportunity. But any type of lean is a massive opportunity. Any type of lean. You might be saying, is it though? Well, let's do a little exercise before we get into today's cash open, and it's only 2 minutes away, so we'll be quick through this. A lean is looking for a jammed price. A jammed price is not a block trade. Understand? A jammed price is not a block trade. A jammed price is a block trade that reverses. So when I see a block trade here, you could put a buy order just above the block trade, right? You could put a buy order just above the block trade. If the price sells off, it's not getting jammed. So you wouldn't have bought here. You wouldn't have bought here. So you wouldn't have had that buy trade, and you wouldn't have had that buy trade. So that's good. It's good news. As you carry on through this process, there's no other block trades. Those sellers were successful. The price dropped down. But what about this block trade here? That gets jammed and the price reverses. Could you have made money on that information? Yes. That's 1 out of 1. Correct? 1 out of 1. This seller gets jammed here. This buyer doesn't. Could you have made money out of that buy trade when that seller gets jammed? Yes, 2 out of 2, right? What about this guy? You could certainly have scratched it. 3 out of 3. What about this guy here? Sure. Price would have been a worst case scenario, a scratch. 4 out of 4. What about this guy? 5 out of 5. Worst case scenario, 5 out of 5. Jammed sellers. It jammed buyers into a short trade, 5 out of 5. What about this guy? What about this guy? 6 out of 6. What about this guy? 7 out of 7. What about these guys? Well, we're just coming into the cash open. So what about this guy here? 8 out of 8, guys. 8 out of 8. Just by using leans. You couldn't make this stuff up if you wanted to. You couldn't actually make this stuff up, but there we are, 8 out of 8 winners, 8 out of 8 trades. And all you've got to do is be able to make sure you get the lean, make sure you get the actual lean you're looking for. It's not that hard, guys. It really isn't. Putting the elements into your favor. It's the same as the volume nodes that we talked about, Paul, this morning on gold. Getting the volume nodes on gold is giving us elements that we can start using to get some trades done. Let's take a look at what Max is doing on the liquidity front. So Max has went into a buy trade here on the S&P. This is liquidity only. So Max started to add liquidity here. Max started to add offers here. And you can see that the buy trade went up, the sell trade went down into that liquidity trade narrative just there. You know, a little volatile start for a lot of the markets, actually, isn't it? In terms of the Nasdaq, the specialists are adding sell-side liquidity. They're adding offers. The specialists are adding offers just now, but they're not adding to their offers. They're just short from the higher prints just now. In terms of the Nasdaq, this is the S&P we're looking at here. But that obviously changes on a second by second, minute by minute basis. So at the moment, they're still selling the Nasdaq off highs at the moment, guys. The specialists are still offering highs for anybody that's trying to trade the Qs. You see what just happened there? The sells came off the highs on the Qs at 92s and the price dropped. Did you see what just happened there, guys, on a 5-second chart? You'll have heard what my comment was about the specialists, and I told you the specialists were offering the Qs. Let's take a look at what that trade was. Now you'll know that that was a real-time call because it's a 5-second chart. So we're using charts that are bang up to date in terms of the stories. So we told you that the specialists were adding offers into the top edges. Now the trading view chart that you're going to see is a 5-second chart, and the actual order flow chart is a 15-second chart. We'll obviously change it so that it's 5 seconds on each so that you're looking at exactly the same. But we told you that the specialists are adding liquidity in the Qs. What happened? The price traded higher. What happened as soon as the price traded higher? The price sold. That's what happened. The buyers kind of get jammed up inside the markets here, and the price has just dropped back out of that price. Now, when you understand that, and you can see that that was a nice sell from 92s down to 72s, that's 20 points. That's 20 points, guys. 20 points on the Nasdaq inside of, look at the time that it took. It took 20 seconds to make $400. You have to do many trades like that to make a living. From 90s to 60s. 30 points. Do you have to do many of those trades to make a living? Probably not. But if you know what side the specialists are on, if you know what side the specialists are going to be on and you're trying to get that specialist's narrative, remember this isn't specialists in terms of volatility, this is just the specialists, guys. This is just purely the book specialists. If you know what side they're on, you can make the play, you can make the trade, you can do the trade. And there was the perfect example of calling it live in the room, getting the short into place, and making the monies straight off that price. Eventually it traded 56s. Specialists are still only offering, by the way, guys. So it's now traded 56s from 92. You're nearly $1,000 up from that live room call. From the very first live room call we just made, telling you what side the specialists were on. We told you on the Qs, they are only offering. Did anybody hear me? Did anybody pay any attention? Did anybody get the deal? If you did, I like your style. Good trade, right? You saw what Max was doing. Max was following in the specialists. Max was following in behind the specialists on the sell side And you know that because you obviously saw the red dash, and this is on the SPX, of course. So you can see that what Max was doing on the red side was adding liquidity on the short side on the uptick here. And you can see what's happened to that trade since. The trade's obviously dropped off quite nicely after Max bought some here, added some offers into the market here, and we've seen a steady gradual grind lower off of that uptick on the SPX. That's 55s down to a low price of 47s. 8 points, which is not bad. 8 points, which is not bad, guys. Gene, you don't need to do many of those trades to make a living, do you? You do not need to get many of those bits of business done to make a living trading. I'll tell you, you only need 1 or 2 of those a day. 1 or 2 of those a day. Crystal clear signals. By the way, the dealers are still short. They're still offering. Dealers are still offering off the highs. But remember, they're offering off the highs. So you're not selling at lower prices. You're only offering high prints. You're trying to capture the dealers positioning. So that was a sell at 72s on the Qs again. Nasdaq 72 sell side, got down to a low price of 63. We've scratched out on that one, and I'm watching to see it's still bearish off higher prices. So I'm waiting for a higher price, and I'm waiting for a jam. And I'll be watching for the dealer opportunity to sell into the higher price in the jam, guys. That's what I'm waiting for. Okay, we sold off of a higher price. Stops are at break even. We scratched out at break even on that one. That was nice. We'll go again. We'll go again into that same liquidity if we can see a jam. We've not seen any buyers showing up just yet getting jammed, so I'm quite happy to let the price go higher. And then we'll hammer it on the short side, guys. We're going to hammer this on the short side as soon as we see the buyers getting jammed into this. They're not getting jammed just now, so I'm happy to let it go up. We've just had our first jam there at 88s. So I'm going to see if I can get filled just into that price area. Got a nice trade down to 82s. I'm going to take some money off that trade. Brilliant, brilliant, brilliant. There it is. There's exactly the trade. 88s down to 82s, guys. Look at that sell-off. You see how they got jammed at 88s on the Qs? You see how nice that was, guys? We waited for the 88 guys to come in and get jammed there. We watched them getting jammed into that price. We then took the short trade against that jam. And then we were off and running off the 88 print. It's beautiful. Back up to 86s. I'm watching to see if the dealers come back in on the short side again, which they just did off the 88s, surprisingly enough. Back in again, guys. Back in on the short side again for me. Just watching this liquidity again. They're trying to get that liquidity 88s. We've gone 90 bid, so I'm not selling it, guys. I've gone 90 bid. Not selling it, but the dealers still offering higher prices, but they're just waiting for the jam. Just waiting for the jam, waiting for that price to stick and then come back out. And that's not what's happening just now. Nope, nothing for me on that one. Taking a couple of scalps against some leans. Nothing of any interest because the buyer's still kicking in. Dealers not really going bullish, but not going bearish either. So waiting for the dealers to change their directionality, and then we'll get back into that bit of short business when they change. You can see as far as the volatility dealers are concerned, they're quite happy to be on the long side of this at the moment. So we're waiting for those guys to kind of tie up. We've got the volatility guys buying the equities. We've got the designated market makers selling liquidity. And they're kind of balancing each other out. They're letting the price go to highs and then selling, and they're letting the price go into the lows and then buying back. And that's all that's happening just now. So we're in pretty good shape. Pretty good shape so far. I don't think there's any danger of losing money today, that's for sure. We've already rattled so much money into the account. It's embarrassing. Max hasn't done any trades at all. Quite quiet as far as Max is concerned so far this morning. 2 trades. The buy trade that we showed you, the sell trade we showed you, hasn't done anything on the way up here.